low capital investment series.
And what shall we talk about today? Does strategy matters? Yes, of course, strategy matters a lot.
And that is where we have come up with a series of different topics, right? And that is where you can take a look. Now, this is our third series of this chapter itself, this low capital investment series, right? How to start profiting, and then the different type, size, quantity, and now what is the strategy, right? What does it matter to you?
A quick introduction of ourselves. I'm Wyman, Core Invest Institute. I've been doing investment for the last 25 years. And for the last 3 years, I've been actively doing trading as my main income on stocks and options. And happy to share more of what we know and our knowledge with all of you.
And I'm Jeremy, and I've been investing for more than 10 years. And I've been in the fund management and compliance industry. And that is where I can share with you my investing experience.
Well, before we start, a quick disclaimer here is that whatever we are sharing here are our speaker's personal capacity, Jeremy and myself. It is not meant to be of any recommendation in terms of stocks. They are mainly for our education and entertainment. Please do your own due diligence whenever you do any investment. And of course, past performances does not and never guarantee future outcome. Material here are copyrighted. Please help us. Do not circulate, do not copy or duplicate any material here. Thank you.
All right, so talking about strategy matters, what are we going to talk about, right? So these are the 5 topics that we are going to share. The best practices, why strategy matters, type of option strategies, which strategy to use, and what should we do now?
So let us just dive into the best practices as usual. It is very important that whatever we do, we need to know our strategies, know what strategies we want to use, and understand the purpose and goal. Because we cannot just anyhow take a strategy and we use it. We need to know and we need to understand them. Then select the right one that is meant for you, right for you, for the right purpose. And of course, always to ensure that whatever we do, ensure safety and the risk-reward ratio. Know your risk, know your reward, and then stick to the SOP, because options has got many ways of doing, and there are certain ways which are better and also safer. So stick to the SOP, and of course, practice, and do not scale up before you get consistent profit. So do your practices, get consistent profit, and once you feel you're comfortable with the profits and consistency, then you can scale up. So apply these 7 best practices, and it will take us a long way.
All right, so why strategies matter? You probably think that I just apply some strategy and it works. And most of the time people buy because they heard of others making a lot of money, and then they just buy because they think that they can make a lot of money as well. But little do they know that actually they may buy at the wrong timing, using the wrong strategy, or even lose a lot of capital because of such in such scenarios, right? So people will use just based on common sense or based on what people say, and then do what they want to do, and that is not right. So that's why when we look at investment strategy itself, it's actually a guide, and investors it gives a guide to an investor, right, to see what kind of decision he has to make based on the goals and returns, risk tolerance, and future use of fund, right? So if you have $5,000 to invest in, right, what is your objective of it, and how do you want to grow it, and what is the amount of risk you want to take, right? So this is something that you want to consider, and it's also largely dependent on these 3 factors below. And number 1, which is time. How much time and effort are you going to use to actually invest in this company itself? Because if you do not have time, then you will have lesser knowledge about understanding the company, and you won't put so much effort into looking at the market. So time is actually very important. The second factor that you want to look in is actually your capital, right? How much capital are you using to invest? If it's a $5,000 capital, then you want to use strategies for 5,000 capital. But if you have $100,000 of capital, then you cannot apply the same strategy as the one that you are putting in 5,000 only, right? So make it very simple. 5,000, it's for $5,000 strategy. $100,000 has his own $100,000 strategy. And the last of all, the most important thing is the knowledge to understand how to invest safely, right? The skill set, the experience and knowledge all comes together so that you can further reduce your risk and get your rewards. So that's why strategies matter.
And as Jeremy said, $5,000, you have $5,000 of strategy, and 100,000, you have 100,000 of 100,000 capital strategy. So here in this series, we are talking about a low capital. So what kind of strategies are suitable for a low capital? Now, we want to look at various type of option strategies. There are so many. You can go to Google, you go to YouTube, you can find everything there today, right? We are not short of information and knowledge over there. We can learn a lot, but there is a problem. What is a problem? So many things out there. And what I'm showing you here are some of the typical things that you can always find. You can take a picture of this, go and Google, go to YouTube, and you can find all these things there. And this is just some of them. There are even more. But where do we start? Which one is suitable for us? Or suitable for you as in particular, specifically for you, what is right? Are they all here strategies or are they applications? So you see, some of it are actually basic strategies, some are intermediate, some are advanced, and some are not strategies, but they are applications of various strategies there. It can be very confusing if we just go to the Google and YouTube, because they will only tell us specifically about one item, but it doesn't give you the whole picture. And sometimes the more we see, the more confused we get. So what is the right type of strategies? So I'm happy to show you here what they are here. So these are, the most common strategies and also applications. As you can see in red, there are 4 basic strategies. These are the 4 basic strategies. And by and large, you will know that, and for those who have already started on options, you will know that these basic strategies over here, okay, are strategies that will require higher capital. Okay, higher capital. So if you are starting with a $5,000 low capital, they are not really very suitable for that capital. The irony is that intermediate strategies, which are called credit verticals or debit verticals, meaning collect money in advance, which is credit, or debit verticals, which are pay money in advance. Okay, and these strategies, ironically, will require lower capital. And when you have lower capital, your risk is also lower. Agree? Lower capital, lower risk. And when the capital is lower, your return that you get actually gives you a higher return on capital, ROC. Lower capital, higher return, that will give you higher ROC. And that is where the intermediate strategies over the basics are safer and also higher return. That's fantastic. Then you have all this blue in the middle, condos, butterfly, straddle, strangle, covered calls, married puts, protective collar, and these are all advanced strategies. You can use advanced strategies on its own, or you can use it as a repair strategy. So there are so many things you can do. And these over here on the right side, they are not strategies. In fact, they are applications. Whether you want to use it for long term, any of these on the left and in the middle, you want to use it for long-term trading, you want to use it for day trading, momentum trading, swing trading, do it for earning calls, earnings play, for monthly income, or even for protection and hedging. So these are the different applications that you can do. They may all sound confusing because there are so many of them. And that is why with a small capital, we need to pick on 1 or 2 things to do and do it well. And once we do it well, we focus on it, then we can start to expand our repertoire of different strategies. So start slow, take step by step, and get consistency before we scale up. Okay. So again, here to summarize, there are many strategies there. Know what they are, understand what they are, focus on strategies that are suitable for low capital. For those who are starting with a low capital like $3,000 to $5,000, there are something which is suitable. Okay, and as we said, some of it are interesting, and we will let Jeremy show you what they are.
All right. So which strategy can we apply? And to our opinion, we feel that as what Wai Min have shared, in terms of the intermediate strategies, using low capital with high return, that is where you'll get high ROC, return on capital. And that is the credit verticals and debit verticals. And that is something very interesting because be it a bull, bear, or side market, you can also make money from there. All right. So this is something that, in our opinion, is one of the best methods to use. In terms of application, we are looking at momentum swing and also income, because they are basically, if you can see the whole 10 years trend, even 11 or 12 years trend, just looking at the S&P 500 index, right? The S&P 500, SPX, is the top 500 companies, the benchmark of 500 companies. And you can see that most of the time, the price always goes up, right? The market price always goes up. And that is where, in between the market price when going up, right, there's a primary trend and a secondary trend. And looking at the primary trend and the secondary trend, you'll be able to find opportunities using the momentum swing, as well as the income strategy itself, income application itself. So that is where something is very interesting to understand and look out for, right? And we also want to also look at market conditions. How can market conditions support us in what kind of different decisions we should use, in terms of application, right? We know that the intermediate strategies are the one that give you high return and using low capital. And then we also share with you the application. Let's look at the whole market cycle. How does it really, show you in terms of the different directions of it? So let's look at it. Okay, let's look at where we are now, and then as well as you can Google for it where we are now. So do understand that there are two kinds of market, right? There is always the bear market and always the bull market, right? Of course, there's the side market, but side market is more on consolidation, which is something that don't really have a good trend to share with you, whether when to enter and exit. But the bear and bull market is always very common, especially the bull market. So during a bear market strategy, bear market situation, you want to apply the right applications and the right strategy so that you can make money out of it. All right. So in a bear market cycle itself, you can take a look at the bull trap, the fear, and capitalization. All right, breakdown, bottom fishing, despair. All these things are all different kind of scenarios that you need to take note of, right, and apply the right application. And then we also have the market cycles, the bull market, right? The bull market cycles. And that is where things start to become more interesting because it's easier to manage from there, right? From accumulation all the way to momentum building to FOMO, right? This is the part where FOMO is something very, is one of the most key areas that you'll have to take note of, because most of the time when FOMO comes in, right, this is the point where most of the people got caught, right? So then, but then in FOMO, there's also strategy for it, right? So please do take note and study up, and search for Google in terms of different scenarios, and based on today, maybe you want to think about it based on today itself. Where are we now, right? Where are we? Are we at bear trap? Are we at shakeout? Are we at FOMO? Or are we somewhere even higher, right? So based on the SPX itself, which I share with you, the benchmark itself, we are actually at the highest, at the point highest now. And think about it. Do you want to be part of FOMO when you do bullish strategies, or do you want to be at accumulation area? So think about it, all right, and understand what kind of strategy suit you most. Of course, what we share now is actually very short. And that's the point where you want to understand more about the strategies.
Yeah, for the past 12 years, right, it has been bullish since the last 2008-9 up to now. It is almost about 11-12 years of bull run, apart from the early this year, the one month of 30% correction, which took about half a year to recover back to the last peak, and now it has gone beyond that level, and that's where we are. As Jeremy says, where are we? We are at the 12-year bull now. Where is it going to go from now? Interesting. And it's year end, of course, and things are expected to be bullish for the rest of the year. Interesting. So Jeremy was talking about intermediate strategies here, and then there's credit verticals and debit verticals. So Jeremy, for the bear market, right? Or we talk about the bull market now. For the bull market now, what are the type of credit verticals that are suitable?
All right. So there are two types of credit verticals. Definitely, as what you mentioned, there's a bear and bull. So for credit verticals, the bull one will be the bull put spread. Very straightforward, bull put spread. You can go and Google for it and understand more about it. And bull put spread is a very interesting strategy using low capital and high returns. But if you are not sure how bull put spread works, please come and join us and understand more about what we are sharing. Later, we'll share with you our Facebook private group. You can always join it, and then we'll share a lot of information on options over there. So do understand that for bull strategy, yes, bull put spread.
What about the bear market, Jeremy?
Yeah, so for the bear market, which is the other one, the credit verticals, which is the bear call spread. All right, bear call spread. So if you can see, the first word is bear, right? So for bear market, bear call spread, which is also a very interesting strategy to actually keep yourself, covered, right, and make the money when the price goes down. So this is a very interesting topic. Again, if you do not understand bear call spread, how it works, please join our Facebook group, and also PM us, and then we will share with you more.
Right. For a low capital of $3,000 to $5,000, as Jeremy shared, the credit verticals are most suitable with either the bear call spread for the bear market or the bull put spread for the bull market. And do Google what is the debit verticals, and they are basically paying in advance, and to reduce the capital outlay, you can use a debit vertical. So those are specific for low capital, and it's actually very rewarding when you do it well. Okay, so now what do we do? Looking at so many different type of option strategies, from basic, intermediate to advanced, plus multi-level of applications. And now you know what is very suitable for a $3,000 to $5,000 or even a $10,000 capital. What now do we do?
All right. So basically, best practices is what we have shared with you. No matter what we have shared with you is for education, but then you need to understand how to do it. So it's very important that you know your strategy well, right? Understand the purpose and goal. Select the right one for the right purpose. Okay. And ensure safety and risk reward ratio. Stick to the SOPs. Practice with a coach. So this is something special, because when you do it by yourself, it could be you may be just thinking that, oh, this may be right. So the maybe right is something that is very crucial, that makes you money or lose a lot of money, right? So if you have somebody to actually guide you, experienced, skillful, and also expert in this area, always find a coach to help you, so that you can reduce your losses, right? Don't bang your head on the wall, and then get consistent profit before scaling up, right? So there's one thing that Warren Buffett shares, right? Risk comes from not knowing what you are doing. So please understand what kind of risk that you are taking, and as well as know your strategy before you put in the money to invest.
So do bear in mind the best practices, and these are the things which will help you to grow your assets. And just to let you know and share with you as well, in Core Invest Institute, we do weekly videos, and we have a 4 series over here. On the top right over here, we have a market insights. Every month we'll do a 1 week on market insights. And this is the low capital investment series. We also have the sector analysis, where we will be reviewing each week one sector. Okay. And we also want to share many of the mistakes that we ourselves as trainers and coaches, we have already made and learned, and also to share with you some of the mistakes that other people do, and that will help you to reduce your risk and experiment so that you can shorten your learning curve. So these are the 4 series that we do on a weekly basis, and we alternate them. So do keep watch on our videos.
Yeah, and if you want to know more about understanding options and also more information about all those strategies and applications that we share with you, do let us know by also scanning the QR code on the left side. We have a landing page on this, Profit with Options. If you want to be a professional trader in options, this is where what Waimi and I, we do as a full-time. Do click on the link or scan the QR code to understand more about what we do. And at the same time, you also can scan the QR code at the bottom, which is the Modern Power Investor Options. This is the private Facebook group that I mentioned earlier, that you can get a lot of free education about options and the news of the market itself in there, right? So do join us, and then we can share with you more about option strategies, applications, and that is where the more you know, the lesser risk you will take. All right, so do join us.
And last but not least, we want to make sure that you trade smart, you trade simple, and you trade safe. That is the way for us all to invest. Stay safe and have a great day.
Thank you, and
Bye-bye, see you in the next video.